Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. Yesterday I said October. I have no idea. Because I'll tell you where it's come from. It was autumnal out.
It was actually.
And I got baseball in my head.
Yeah.
And, as a Yankee fan, as you know.
You think they're going to be playing baseball in late October?
Yeah.
Okay.
No, but as I've said to you a number of times, for most baseball fans, they enjoy the regular season.
Correct. And
I am not one of those people.
Yeah.
As a Yankee fan, as an arrogant Yankee fan, it's all about October. As Bill Hockman knows. Sorry, Amanda. This is Market Call. 1 o'clock on the East Coast, August 22nd, Thursday. Carter Worth will join us.
In just a few
Typically,
minutes.
if we say, is it Butters on Thursday?
No,
or
he's on vacation.
Where's
Where
Butters?
is he, up in Michigan or
he's
something
in
like
Maine
that?
or
Michigan.
He can't.
Yeah.
You can't dex him because
Docs.
People will find him.
So that's maybe we'll do like a fake Butters earnings insight analysis.
There's no fake Butters.
Fake Butters.
We would call that margarine. Let's throw the rundown up. See, Bill Hockman got that. Bill's laughing in the control room. Expect market volatility. We've talked about this.
We have done.
Katie Stanton. No, not Katie Stanton. Katie Stockton. Katie Stanton is your friend.
Yeah.
Katie Stockton was on Fast Money 2 nights ago, and we discussed battleground inflation commodities. That's Amanda Diaz at her best. How it started, how it's going, audience Q&A.
Yeah.
So let's get into it.
We got a lot to go. All right. So we started off the week by saying that if you're looking at the SPY, that's the ETF that tracks the S&P, the implied volatility in the options between now and Friday's close, especially with, we didn't think there was a whole
Seemed
heck
cheap.
of a, yeah, it seemed very cheap. It was about, a little less than 1% actually to start off the week. If we just want to look at the VIX, and then we'll go back to this really quickly, the VIX has picked up a little week and this all week. And this is what you would expect, right? Into an event that nothing else that people have been talking about in the markets is tomorrow morning, what Fed Chair Powell going to say. You can see that little bounce off that 200-day moving average. Let's go back to the S&P for a second, Guy. You and I had also been talking about earlier in the week. What would be the thing after this V reversal that would cause a breakout and then cause the S&P to establish a new range above those prior highs? It's also interesting that once we broke that uptrend, and you and I had been tracking that, Carter had been tracking that for a while, we had a quick 2-day drop. You see that 200-day moving average. Carter's 150 is probably a little higher. That's where it found some support, and here we are now at resistance. Thoughts, Guy?
Well, I think the speed with which we recovered is great if you're long, but I think concerning if you're just looking at this thing holistically. Again, the April move, we got down to the trend line, and then we did the slow grind higher, which was, painful if you were expecting another leg lower, but very constructive if you were bullish. This one's a little bit different. I mean, the speed with which we recovered is great, but again, I think concerning. And the VIX to me, and I'm glad you brought it up, it obviously had a very significant sell-off, but the bounce over the last couple of days on what has been pretty benign today, notwithstanding, is something to keep in mind. So uptrend line broken, traded back through it. Did we get to the prior highs? Not exactly. And here we are today, probably contesting with that uptrend line once again.
So interesting. So let's just kind of talk about this meeting tomorrow. It starts today in Jackson Hole. So you got all these Fed governors and the like. Jay Powell is going to speak tomorrow morning. And I can't remember who mentioned this to us earlier in the week, but the name of this symposium, Guy, is Reassessing the Effectiveness and Transmission of Monetary Policy. So
whoa.
That's the name of the talk.
That's what they're calling
That is reassessing the effectiveness and transmission of monetary policy. Now, you've used this term. I know you love to use it. The
symposium,
the long and variable lags of monetary policy, right?
I probably said
and so
that.
for years, we haven't said this one in a while. When we used to talk about the Fed's dual mandate, and what did you used to say?
Their dual mandate is making sure both the NASDAQ and the S&P 500 go higher.
I love that, right?
No, there's no question.
But it's really stable prices and full employment.
I'm sorry, Amanda. I'm not supposed to curse.
So really quick,
I'm in a great mood.
You were. I tuned you up. But, reassessing is really interesting because in late 2021, they had to reassess
a lot of things.
Their very easy monetary policy that was causing asset bubbles and no shortage of things from stocks to crypto to housing and all that sort of stuff. And we were talking about the long and variable lags. When they set out to raise interest rates to kind of tamp down demand, slow the economy, have unemployment go up a little bit, it took a lot longer than we would expect. Right now, we're debating the health of the consumer, the health of the economy. We spent some time yesterday talking about the jobs data that was, reassessed as worse and the like. So what do you think here, guys? So if they're reassessing, now high rates, what does that mean to the downside?
Well, it sounds to me as a reassessing process and a reassessing how they sort of analyze things. So, which you should always do,
Correct.
right? I mean, you should always be evaluating, self-critiquing, looking back and saying, what could I have done differently? So good for them. But as we've grown to learn, they're typically late to the party on the way in and late on the way out, and they zig when they should zag. And I'm not a hater. It's just factually true. And your point about the long and variable lags, I think it's manifesting itself again. Forget about the politics of the job and what people are going to do with them.
Yeah.
I mean, the reality of the situation, I think the labor market is strong, but not nearly as strong, I think, as a lot of people thought. And I do think you're going to start to see, again, I've said this for the 100th time, this surprisingly stair-step higher in the unemployment rate, which doesn't suggest anything other than a normalization. You said it yesterday. I mean, historically, the right unemployment rate is probably somewhere between 4.8 and 5%.
I think it's the average.
5-ish. Let's just call it 5.
Over the last 30 years has been 5.8.
But it's how you get there, right?
Totally. Yeah. I get it. So really quickly, and so when you're talking about the Fed and the data that they use to kind of inform their decisions, let's go to the 10-year yield chart, but here's two competing this morning pieces of economic data. One is on U.S. manufacturing. It contracts at its fastest pace this year. The other one, though, is PMIs. So this was the PMIs falls to 48 in August. The composite PMI declines to 54.1%. So there was two pieces of data this morning. So one was the services that was doing better than expected, and the other one was manufacturing that was doing worse than expected. So again, it's about as clear as mud.
Yes, which I never really understand what that means. I mean,
mud. If you were taking a thin layer of mud,
particularly
you can't
clear.
see through it.
I understood.
But there's plenty of liquids that you can see.
Understood.
Through.
Yeah, noted. So service, I think that's part of the problem. I mean, the manufacturing side of things suggests that, again, the economy is slowing. The services side of things, something we've talked about for a while. And I think that's what the struggle is. And I think, again, in my opinion, one of the reasons why inflation is going to be as sticky as it is the service sides of things. But I'm not an economist, and I get it. And, they're going to lower rates, but, they're lowering rates seemingly into a pretty interesting environment. I mean, gold, you're lowering rates into something, and we've talked about gold for a number of times. What is that going to do to the gold market? And historically, what does a move in gold of this magnitude sort of signal? So we'll see.
So one thing I'd say about mud, going back to that for a second, it's got viscosity that does not allow. That's from 8th grade biology.
Yeah. Okay. Do you know the term your name is mud? Do you know where that comes from?
I don't.
You should. This is a good one,
Harvey
actually.
Mudd?
No.
Oh.
So when John Wilkes Booth
shot
President Lincoln,
killed him
in the Ford Theater, he did.
Yeah.
He fell off. He jumped onto the stage.
Mm-hmm.
I think he broke his leg or severely injured his leg, got on a horse and rode to a local doctor.
Mm-hmm.
His name was Mudd. Now, I'm not sure if Dr. Mudd, M-U-D-D, I'm not sure if you're looking this up, aren't you?
No.
I'm not sure if Dr. Mudd knew what was happening in terms of John Wilkes Booth. There wasn't the internet back then.
Two Ds.
Samuel
Mudd.
Thank you. So he might not have been aware that John Wilkes Booth had just shot the president.
Yeah.
However, I think he was subsequently tried and killed by being a co-conspirator with John Wilkes Booth.
And how was the play, Mrs.
Yeah, that was on, by the way, it was Good Friday that took place.
All right, let's do this.
You learn a lot here on the market call.
I learn a lot every day. So
you brought up Mudd, not me.
I did, because Carter's got a hard out pretty soon.
Sorry, bring him in.
Let's bring Carter Braxton Worth of Worth Charting. Sorry about that, Carter. We just really
good. No, Dr. Mudd, I think they think that he knew, but he didn't. How would you know if someone rode into your stable and said, "I got to fix my broken leg"?
Killed him anyway.
But anyway,
so Carter, maybe help us out a little bit before we get to some of the commodities you want to look at. There's a lot of great stuff there. We saw your report on oil earlier in the week. Expectations into tomorrow, listen, we've been talking about all week long, the VIX guy's been mentioning it's been kind of inching up a little bit, as the market's been kind of inching up. That's not something that you see too frequently, but it does suggest that, investors, traders are kind of positioning in front of this event. We pulled up that S&P chart. Maybe it means nothing to you. Let's pull it up really quickly. Just thoughts here in general heading into tomorrow morning.
Yeah, so a couple things pointed out. If you were to look at a log scale of this S&P chart, we have broken trend as is depicted here in the arithmetic, and the ricochet is up just to the trendline line, not through it, and is hitting its head to the penny at the underbelly of the line. And so we have what, a 9.7% sell-off over 14 sessions. We have a 10.5% rally or thereabouts, retracing almost all of the move, one unfilled gap. And so the question is a couple things. Seasonally, we know this isn't a great period, although obviously the past 2 weeks have been good. But August, September are typically less robust than other months. And we also know we're facing an unusual presidential election where the outcome is likely to be, let's say, very well received and very not well received, whichever side wins. And so I think one we know is that the volatility that's with us is likely to continue. And the question is overall, if one's not a trader, but one is sort of in a thoughtful situation of, do I increase or decrease my exposure to the risk asset known as equities, looking out over 3 to 6 months? And if one had to answer the question, someone said, I don't want to do that. I just want to pick this stock for a breakout or that one for a short. But in principle, if one was a fiduciary of other people's money, that question is very important. And my own hunch is one is well served to answer it by saying, I think, reduce exposure to the risk asset of equities.
All right. So we started this conversation talking about, the push and the pull between services side of the thing, the manufacturing side of the thing. In the middle of all this, a lot of times is commodities. And that's some of the work that you did and some of the charts that you brought forth. So let's take a first look is the Bloomberg Commodity Index and then walk us through, Carter.
Right. So the CRB, the Commodity Research Bureau, has a great index, but it has more history. But this is an important current version. It's the Bloomberg Commodity Index. You see what it is. Anyone whose eyes are working, there are columns and rows. The columns depict what's in it. The rows give you the weight, where it trades, and so forth. So, and this changes. Not always that gold is the top, but it's because gold has done so well of late. But you see that you've got industrial metals, precious metals. You have grains from soybeans, wheat, and corn to other soft agricultural things, coffee and cotton. And cocoa's not in here, but you also see industrial metals like nickel and zinc. So there are many, but it's a good aggregation. So let's look at a chart of this index going back to the 1970s. And of course, you see that period of inflation from 1970 to 1980. That was the great inflation period that has never been rivaled. Gold hit its all-time peak and is still a peak adjusted for inflation. If we put some lines on the chart, and the question is, we broke out there, and that was largely associated with COVID, with the bottlenecks, and also with the Ukraine invasion, where oil spiked, and nickel in particular. And now we're back sort of below the level of the breakout. My hunch here, though, is to basically buy this dip.
Yeah. So
we have
about this.
If you want to keep going, please.
The conversation, the push and pull between yields, where they're going, what it might mean for commodities like this. And again, one of the fears is that if the Fed were to, let's say, combat economic weakness by lowering rates too quickly, might you see, and Guy, you've been talking about this, and maybe you want to speak to this a little bit, a reinflation of like some of the prices and some of these commodities, which would then turn into a little bit of a headwind again.
Yeah, that's why I brought up gold. And again, I think, and Carter can speak to this as well, I've always said that gold is a commodity in name only. It doesn't really have an end use ex jewelry, but other things like crude oil, like heating oil, beans, grain, all those different things, they are end use commodities. But to your point, Dan, That's exactly what I think is going to happen. Again, people don't want to make the same comparison to the early 1970s, but I think there are some comparisons in terms of if they were to move too quickly, would they just sort of releash or reignite that inflation dragon that they think they have slayed? So we'll see. I know Elizabeth doesn't share the same fears, but we'll see how it plays out. But within this, Carter, you have the Bloomberg Precious Metals Index, which is going to look a lot different. So speak to that.
Yeah, sure. And before we do that, and I appreciate moving forward, go back, if we could, just to the long-term chart of the commodity, and something that Guy is referring to is, well, if you consider that the household's cost, meaning in 1970s, what one spent on clothing, right, or fuel or food, is much higher as a percentage of income than it is now. That's because agriculture is much more efficient, and you can go into a Target or Walmart, buy a T-shirt for $1. Whereas that wasn't the case. It was more dear. And so these raw materials, the costs of eating, the costs of clothes are all much lower. Housing is a different matter, but much lower as a percentage of disposable income and so forth than they were in the period of 1970. But Guy, yes, the precious metals, let's go through the various sub-industry groups. This is what it is. It's very clear. The weightings are beautiful. 3/4 gold. You see on the top 1/4 silver. It's a beautiful pattern. It has broken out, and there's every indication of going higher. But if we roll through the various sub indices, this is the industrial metals, and there's two ways to annotate this. But you see here, it's 35% copper, 27% aluminum, zinc, nickel, lead. Lead small, but it's all important. And that spike is nickel related and copper. That was the invasion of Ukraine. Another way to draw the lines is this. And so kind of a pair of twos, to be fair, but the point is that there's no pressure here. These are not signaling, off to the races. Notice they're not making all-time highs versus precious metals. So a big distinction, industrial metals lagging heavy, that speaks to softness in the global economy, China and or prospectively other major economies. We have other sub-industry groups. Of course, grains are a big part. It's in free fall. I mean, this is, corn, soybeans, corn's in your ketchup. It's corn's in everything, right? It's the corn syrup and soybeans, wheat. This feeds the cattle and so forth. It's in free fall. There is no pressure here. If you see there, huge surge from COVID, right? The low, literally COVID, and then this almost full give back. And there's no indication this is over. My hunch is to be short this or underweight. I think we have within the softs, so this is coffee, sugar, and cotton. There's others, of course, there's cocoa and so forth, but altogether different, much better. These are much smaller crops, of course, and they're subject to weather. I mean, the big grain belts don't have that, but coffee can get freezes and sugar and so forth. So a better pattern, and this is an area I would be overweight, softs relative to grains. I think we have others, but if we don't, I've forgotten.
We have energy for sure, and I think this
energy
is one that we want to sort of focus on, yeah.
And so just as the industrial metals are in free fall, zinc, nickel, copper, this is also makes its low during COVID. Because no one's driving a car, no one's flying a plane, and then it takes off. And then we've given back all since the stock market peak. That's the key, late 2021, early 22, stock market peak, so do commodities, but energy has really never gotten better. So my hunch is, again, this is going to go lower. We can draw the lines a different way. And so critical juncture, in this case, I'm betting down. And you can see the weights there. It's got driving fuel, it's got natural gas, and so forth.
Yeah. So Carter, again, so we're crisscrossing this a little bit. So, energy is not a space you're hot on soft. You are, Guy and I are going to try to make some sense of this as it relates to some of the groups within the stock market, how it relates to, so like, this is great work. It's really informing some of the inputs that we've been talking about, the inflationary pressures on a lot of these S&P 500 companies that we're focused on. Let's just run through some of your stuff relative to the S&P, because I think this is really informative also.
Yeah, so this is going back all data. So you see, this is a share chart, relative strength chart, relative performance chart. You can call it what you want. It's simply one thing divided by another. Forget about the y-axis. It's the direction of the line. Brown line's going up, commodities outperforming, the S&P brown line going down. So let's bring it to life. And this is the key thing, right? So commodities in 1999 relative to the stock market are at a low. the stock market .com peak. And that interesting low, also they're at a low when the market is at a low, the COVID low. And so one can say, yeah, when is this ever good? And it's broken trend. So now let's look at the next several things, and I think this is important. So this is that same chart, and you see those two periods that I've depicted. So that's basically, and call it 1970 1980, when commodities were substantially outperforming equities, and then again from 1999 to 2009. So let's remember those if we can, and look at the next two charts. So the first one, this is 1971 to 1981. Think about it. This is the issue. Are we at some point? There's been a lot of people who do the fundamental work say there's been not enough investment in copper mines. It's long cycle, an aluminum shortage, and then ultimately you get a commodity cycle, and that's the question. So look at that. That is a blowout. Like you're watching one of those things is Usain Bolt, the blue one, and the purple one. I don't know that guy, high school runner. Okay, let's go back to the all data chart. One up. With the two periods. And let's look at the second period. This is essentially a .com peak, 1999 to 2009. So one could say, but the stock market was very bad, 99 to 02, but then it was very good, 03, 04, 05. And here too, S&P negative, 1999 to 2000, and so 2011, excuse me. And this is the issue. Are now back to the all data with the two down if we can. Are we on the cusp? That's the question.
Right.
It's all been so bad, except for precious metals. I think it's an important area that one needs to be exposed to. And ultimately, there will be a commodity cycle, just as there has always been. And one is well served to be exposed to this area.
That is the rub, right? Are we setting up for another type of those periods that we saw from the early 70s into the early 80s in this last cycle as well that you just pointed out in the prior chart? These I hate using the term, but super cycle in so much it completely, the commodities completely outperform the S&P 500. And if you didn't see it through that lens, you would never think that we've ever seen outperformance like that vis-a-vis the S&P 500.
All right, Carter Braxton Worth, we know you got to get out of here. We really appreciate the heavy lifting on that. So we'll see you back next week. Have a great long weekend, bud.
You guys, okay, bye.
Thanks, Carter.
All right, we have a question real quick. We have it in the, if you look.
Well, I want to bat this around though.
Oh, go ahead.
All right, so let's talk about this. So to get that sort of super cycle, again, a term that you don't love to use.
No.
You need a few things to happen, right? So you think about China and you think about expected growth there. You think about some of their attempts at stimulus. It's really interesting to me that our consumer has been powering, right, this recovery that we've seen post-COVID. Obviously, there's been a lot of monetary, and fiscal stimulus that's helped out a lot. But, in the prior years to COVID, guy, like China was such a key component from a demand perspective, right? And that's not happening here. So if they ever were to go with like this huge, what do they call it, bazooka sort of stimulus, would that be the thing that kicks off this thing and this kind of move in commodities? Because to your point, I get what you're saying about gold, but gold's rallying for different reasons now.
It's completely different game, and the true commodities, the end use commodities, clearly been under pressure. We just talked about it. Carter just showed you. However, if there's going to be this continued move lower in the dollar, if there's going to be this continued, it's seemingly like global lowering of rates, right? If we're going to start to see central banks I do think it's going to create sort of this inflationary cycle that's going to be supportive of commodities. We'll see. It doesn't appear that way now, but you know what? If you go back and look, it never does right before.
Yeah.
So we'll see.
And back to the China situation. So we've been talking a lot about geopolitical stuff for the last few years. We know what that did initially to crude oil when Russia invaded Ukraine. And listen, it's 2.25 years on right now, and we're not having a problem with crude oil right now. We have crude at $73. And when did we tap the SPR guy? Was that?
Oh, geez. I mean, it's got to be sometime mid last year. I think it
was mid 2022, and
it might have been. Yeah,
I mean, oil was above $90. So here we are at 70.
No, I mean, in terms of, listen, we've said it. I mean, in terms of trading, just through the lens of being a trader, I mean, they sold at the right time, and now it's at levels where they. So yeah, I mean, you can say my problem with it at the time was they were doing it for the wrong. It was not set up for the reasons that they did it. But whatever. I mean,
Right.
it's all revisionist.
Well,
stuff.
so then this goes back to the point I was trying to make with China and growth. And you made this point about China on many occasions, thinking about China and kind of vis-a-vis Taiwan. Our good friend Doug Cass over there at Sea Breeze Partners, he also writes for Real Money. He pinged us earlier on a headline or a story out of the Financial Times. I think it dropped about an hour and a half ago. And I think this is really interesting. Taiwan's top security officials make secret trip to U.S. for talks. Why are they secret? Well, they don't really want China to know that they are meeting.
Well, they know.
Well, they do know now. So good on the FT. I was reading this article, Guy. It's really interesting. There is some sort of agreement, and this must be between the U.S. and the Taiwanese, that the Taiwanese diplomats cannot go into the District of Columbia. So they meet in like Annapolis, Maryland, or something. Is that kind of interesting?
Well, I mean, if you look at the Olympics, it's not called Taiwan; it's called Chinese Taipei or something. So they're, I mean, it is interesting. But I mean, the overriding, there's concerns.
Yeah.
I mean, and I've had that concern. Listen, the concerns have been unfounded. Obviously, nothing has happened, thankfully, but it doesn't mean they don't still exist. In terms of China-Taiwan situation, it's still out there.
Yeah, it's also interesting that there was a headline in somewhere yesterday, maybe it was Bloomberg or the Wall Street Journal, talking about some of these 16 Pro iPhones, from Apple. For the first time, they're being made in India. So if you think about reshoring or diversifying, away from, Chinese, manufacturing. So all these things are happening. And so just think about this, guy. Tim Cook had such a cozy relationship with, China and the party there. And it was really important. And so did Elon Musk and Tesla. And if they're all moving away from manufacturing there, doesn't like relations with the US or the West just become less important as far as keeping this sort of status quo? You know what I mean? Because this interdependence on each other.
Less important through that lens, but more vulnerable through another, right? If we're going to tweak that, if we're going to sort of poke that dragon, what's the retaliatory thing?
That's the point I'm making, especially at a time where their growth is so weak. So
we'll see. I mean, there's a lot. Listen,
lot there.
The Newmont mining question that we got yesterday that we actually created a slide for. I'm curious your thoughts on Newmont. Here's approaches 54. So I'm glad that Aaron said 54, because if you go back to 2023, I think it was January. If you have a chart, Amanda, you'll see that sort of 54 and change is where we topped out at. So we're at levels we haven't seen effectively, I don't know, about a year and a half or thereabouts. What do I think? Yeah, I mean, Newmont Mining is never a straight line to the upside, but it's been a pretty sort of lower left, upper right, if you go back and look, since February of this year, and I think that will continue. Again, I don't think it's going to be a straight line higher, but if you look, the moving averages, for the first time in a while, is starting to move in your favor to the upside. And you know what I think about gold. So the mining stocks definitely have room here. I think 54 is a logical place for it to stop. I think we recently got up to 52-ish and change. But yeah, Aaron, I think this is still one where you're looking to buy weakness in Newmont Mining.
All right, Guy, you spent a lot of time on the line, right?
On what?
On the line.
That Slack line. I see these things. No, people can do this
just
stuff.
The internet. Online.
And I've watched people do this
Correct.
Slack line.
Yeah.
It's amazing what people can do. The balance of people.
You spend a lot of time on the line.
I do not, actually.
Really?
Well, I don't even know what that means.
Online. You're like on the
surfing
Twitter,
the web,
whatever. We know you don't do a lot of e-commerce, but
no.
So remember back in COVID, remember all the way back in 2021, remember there's all these services that you could do from home. You could, do video from home. You could buy from home. You can do all this sort of stuff. So Amanda thought we'd do this little, on the line, they have these like memes, right? Like, you know what I mean? Where the kids
somebody said something to me earlier today. So now you're really talking.
You have a good meme?
Well, no, but somebody said to me, hold on what they said. I wish I could find it. They talked about apparently when something is true, it's like you say the word that's like your truth. I don't know. I should find it for
Double
you.
True. All right. Well, here's the deal. This is what I'm trying to get at here.
Please.
So there was this meme back in the day in 2021. It was like how it started, how it's going. You know, you remember that thing?
Not really.
So Amanda thought we'd do a little how it started. Let's go back to the 5-year here really quickly. So we want to talk about Zoom. Their CFO was stepping down. They were kind of, adding to their buyback. Look at this chart. I mean, this is something, Guy, that reminds me of just some of these internet companies and the run up that they had 98, 99 into 2000. And then what happened in 2001, 02. And they lost 80, 90% of their value. And many of them went out of business. Well, here's the thing. And one of the reasons why I think you and I have been incrementally positive on the Zoom is the Z and my Zebra trade. It's like someone's going to buy this.
Having a
company.
day today.
Well, look at this. I mean, I just want to go through this. So it's up 11% today for a whole host of reasons that I actually last night when we were talking about it on Fast Money Guy, it was up like 2 or 3%. They have $7.5 billion in cash. Yesterday, it had a market cap of like 16 billion. Okay, they have no debt. And so you think about that balance sheet, and then when you think about their earnings, now they've obviously had that spike during COVID. Okay, so I think in 2021 they went from, I'll tell you this, they basically were like maybe they were making a little money in 2020, and by 2021 they were making $3.35 in earnings and $5, and then that's kind of been coming down a bit. And revenue growth, obviously spiked the same way, but the highs in its revenue growth, you ready for this, or highs in the revenue were last year, guy, $4.5 billion.
So what's the problem?
Yeah, so what's the problem
Right.
here? So the valuation is perfectly reasonable or whatever. So this is really interesting. So that's how it started. Let's look at how it's going right here. So you see that, and it's interesting. So let's toggle back and forth. Look at how this thing's flatlined
Carter
for
Worth.
2 years. You know what I mean? So this thing is a buy on any pullback to that 200-day. What do you think here?
No, I think that's probably right. Just on valuation alone, I think the concern over the last couple of years, it's commoditized. There are other things you can use out there, but in retrospect, everybody's been out there probably knows it's still the best one out there. I mean, I'll put it up against Microsoft Teams and all the
Google Meets. You're not every time you get a Google Meets, I'm waiting for you for like 3 minutes.
Well, it's on my phone. By the way,
apparently
it's somebody said you have mad Riz no cap. You know what that means?
No. Really
Riz, R-A-Z-Z. Somebody can I think it means like you have game, and no cap means no lie.
Yeah. So really,
Anyway,
really interesting. So, and I just want to put the final point here on the Zoom. It also has increasing margins. So in 2022, it had like a 74% gross margin, and this year expected to be like 78.5 or something like that. So why has this stock been absolutely left for dead? It makes absolutely no sense to me. When I think about Wall Street, analysts, there's 10 buys, 22 holds, and 2 sells. So that's how it started. That's how it's going. Let's look at Snowflake. Will you give us a quick recap of what happened last night?
Well, I mean, we talked about it last night, and I said it. It's not like the quarter was a disaster, but I mean, it's still in terms of sales, price to sales, it's still an expensive stock. And I think, and I said it last night, in order to I think justify the price, probably has to double their revenue, and I just don't see it happening. And we said again, it's not an indictment on the company; it's an indictment on the valuation. So that's charts 1. But if you go back longer term and look, you'll see. I mean, at one point, I think this was like $160 billion market cap company. It made no sense. And at these levels, still, it's a little expensive, in my opinion.
Yeah, I mean, this is one that, it was an absolute darling when you think of like parallelization and all these sorts of things, and like dealing with companies' data, right? And you would have thought, so last night on their call, when we had, I think it was Kate Rogers that was giving us the 411 on what was going on while we were in Fast Money. She said, she was quoting them from their earnings call. She said like AI like 8 times in that thing, AI. And this is getting obviously absolutely no credit for anything that they're doing, anybody that they're partnered with and that sort of thing. And so to your point, and you made it, valuation is still really expensive here. So unless you start to see a reacceleration in some of the metrics that got people really excited a few years ago, I mean, this thing is just stuck in the mud. Toggle back really quickly on this one, because I do think it's quite interesting. Look at that thing that had the massive run after its IPO, and then this is the 1 year, obviously. So again, kind of left for dead here. Not interesting to you or me, guy.
We have a couple of questions. This is from Ramesh B. Can the team opine on Palantir? Any comment on the next GOP leader, Mike Gallagher, joining Palantir? I didn't see that, but I think Mike Gallagher was on this morning on one of the shows. Palantir's been a name, if you remember, Dan, which you do. That was the P in my hope trade, which didn't work out too well a couple of years ago, but it seemingly was. I was just ahead of my time. And longer term chart, you'll see. You'll say correctly that it's expensive. 100% is expensive stock without question. But I think the good news about Palantir is they're not as dependent on the military and the government as they were a few years ago. They're getting into these medium-sized businesses, which should be supportive. And, they're sort of at the forefront of AI and data. So I still like the name here.
Yeah, I mean, listen, it's marginally profitable on an adjusted basis, and so when I think about, the sort of EPS growth that we're expecting and revenue growth of 24% this year, 21% next year. I mean, this is not like a hyper growth company, right? So you look at EPS growth, also about 20%, trading at 90 times this year, 75 times next, 21 and a half time sales of next year, guy. I mean, it's just not that exciting. Yeah, it's got an 83% gross margin or something like that. So I just think that this is obviously a name that is, benefiting from some of the
hype,
excitement.
the hype around.
All right, what else you got?
Matt Walter, what's a good way to trade the VIX? I've used UVXY, but is there anything better? I don't think you trade the VIX.
Yeah.
Is my answer to that. I think you use the VIX as a way to trade maybe indices, the S&P, individual stocks, but I don't think you use the VIX to trade the VIX, in my opinion.
Yeah, and one thing, if you want to trade the VIX and you can trade, at the money straddles in the SPY. If you think about what the VIX does, it measures the volatility of the SPY and obviously its components. So that's one way if you want to be long vol. You can do it that way. But I used to trade a bit of VIX options. The problem is there's a shit ton of skew in those, right? Because
shit ton.
Well, they can only go to zero, and they're not going to go to zero, right? If you look at a VIX at 17, but like just to give you a sense of like the September 4 expiration VIX. Okay, the 15 puts right now. Okay, so it's 17 and a half or something like that. The 15 puts last traded at 25 cents. You know what I mean? So there's really not a whole heck of a lot to do in those things. And then the upside calls, while they look dollar cheap, they're kind of expensive in vol terms, because if you think about how little time, let's say the VIX spends above 20, the 20 calls on SEP 4, okay, the SEP 4 expiration, costs about 95 cents. So that's way out of the money. You need a 20.95. It's just not like that happen. You're probably better off selling those guys.
Yeah, well, yeah, except that
no one wants to do that with what happened on August 5th.
JS is saying, and this is the UDN is the Invesco Dollar Bearish Index Fund, I believe. And what his question is, takes on the UDN breakout to represent a bearish view in the dollar. I don't know. I mean, I don't know how these things are constructed. There's so many of these ETFs out there. I don't know if you're going to get the bang for your buck, no pun intended, that you think you're going to get. I would say if you have a bearish view on the dollar, the way to play it is through gold or any gold proxy out there. That's just me.
No, that makes sense.
Oh, you're done? That's it? You don't want to
I don't know. I mean, like, listen, I'll say this. A lot of those things, if they're ETNs, they have like a lot of decay in them. They're just not great instruments to hold on long term, but you can kind of use them maybe to get short-term moves.
Chris L., how do you anticipate the banks to trade with the Jackson Hole and rate news, specifically watching JP Morgan? Well, as Jamie Dimon said about a month and a half ago, he thought his stock, when I think it was trading 203 or thereabouts, was expensive historically in terms of different valuations. And if you remember, he said, at those prices, they weren't going to buy any stock back. The stock got down to maybe 195-ish. And now here we are at 215 and change, within earshot of the prior all-time high of 217 and a half. So I think the stock's expensive. JP Morgan seemingly wins in every environment, but there has to be, by definition, an environment that they don't. So, I think JP Morgan, I think most of these banks have gotten ahead of themselves. By the way, the KRE, which JP Morgan is not in, has not traded particularly well lately.
Yeah, the one thing I would just say about this, and you and I have been talking about it for a while, as rates were going higher, it seemed to be good for JP Morgan. As rate expectations, were going lower, it seemed to be good for JP Morgan. I think when you look at that move from August 2nd down to August 5th, like we were talking about it leading up to it. Correlations would go to 1. You know what I mean? When we had that sort of panic, and it happened when you think about the speed in which it sold off. So again, let's see what the Fed has to do, say about rate cuts. You and I kind of feel like it's probably going to be a sort of slow and steady sort of thing, 25 basis points, let's say SEP, NOV, DECE, you know what I mean? And then we go back to reassessing the transmission mechanisms of monetary policy, right, whatever, the long and variable lags. Guys, is that it for us?
It is. Keep an eye, again, the VIX today, I think, again, we talked about it earlier. I do think the VIX is interesting, 17 and change right now. We'll see how that closes.
Yeah. You said, first thing you said to me this morning, it was kind of pre-opening. You said, you know what, the futures are looking up a little bit, maybe 20 bips. You thought we would reverse. We have
as
reversed.
Doug Cass did as well, by the way.
Oh yeah, he did ping us. So interesting to see what happens into the close, because that'll give a sense of how traders are positioned. We have a really important on the tape podcast that's going to drop tomorrow morning. Danny Moses is obviously going to be back with us. And then we have Peter Bookvar of Bleakley Advisors.
Book. I mean, he does tremendous work.
Tremendous job. Thanks to Carter Worth for being with us. What else you got?
What are we in?
Oh, the market matrix. This is like week 16 guy or something like that.
Amanda will tell us.
So here's what we're doing here. This is an AI generated podcast that our team has put together here. We take 10 of the top business and market stories. We put them into Perplexity with a prompt to summarize it. And then what we do is we put that text into a voice bot. We call him Brunson. He's kicking ass and taking names. And then you get yourself a little podcast under 10 minutes. You don't have to listen to Guy or me. Go to your favorite podcast store. Subscribe. It's MRKT Matrix. And you know what you can do, Guy? Once you do that, once you subscribe, after you listen to
what
it,
do you do?
Share it, rate it, review it. That's how
you
people
can forward it to people.
Yeah, that's how people find it.
We have a couple of people asking about Occidental Petroleum.
Oxy.
It comes out OXY. So I think Buffett's stake is now, I want to say 32%. Please don't at me if I'm off by 1% or 2%, because that's not really the point. What I find fascinating about this stock is, you know, he farts in the direction of certain stocks and they go up or down. Oxy owns now 31%, and the stock's been freaking nowhere. I mean, look at this stock, go longer term, go over the last few years, and you'll see this has just been flatlining, which is remarkable to me, how poorly relative to some of these other names it's been trading. The questions that we're getting is, you know, is it worth a swing trade here vis-a-vis the fact that Buffett's in and stuff? Yeah, I guess. I mean, if you look at the lows, Dan, I don't know, 55 or so, I think on the downside is sort of your bogey. It's trading 56 now. But man, oh man, I mean, if you've been buying this hoping that you get a bounce on the back of Buffett, it's done effectively nothing for you.
You know, I'm going to at you right now. It's about 28%.
All right, let's
see
close.
what I did.
I mean, what did I say, 31?
Yeah.
Are you sure it's 28?
I'm looking at it right now.
Whatever.
27.86.
I just
said, I want to say at his age.
Whose age? My age or Buffett's
Buffett.
age?
No, you guys aren't far. But at his age, with all that Dr. Pepper he drinks and all those C's candies, he's probably gassy, that guy.
You know think he is?
Yeah. Oh my God. Like, you know what I mean? You know, I'm just saying.
I had a burrito the other day. You know, when I order burritos, I do not get beans.
You know what's funny? I ordered you a burrito today. We got Chipotle. And on my way back, as I was walking to the office, I didn't eat it. I ate my own burrito.
Dropped it.
No, I saw
homeless guy.
Yeah, I gave it.
That's nice. That's
so,
fine.
So
I'd rather.
So you didn't get a burrito.
That's
today.
fine. I don't need a burrito.
All right, we got to hop. Thanks everybody. We'll see you next week. Bye bye.